I'm doing my Forex journal video vlog, and this past week I've been looking at 5 different trades. So let's just get straight into it. The first pair that I was looking at was the CAD JPY. So as we can see here, I had entered a short position around the 81.66 level. So this trade is still underway. I haven't closed it or anything. Going into why I took the trade. So we could see here that price is currently in an uptrend on the daily chart, and it has made a resistance area around the 82.11 level. It's bounced off that level several times, over here, and over here. So it gave me an indication that price was ready to come back down again, possibly down to the 100 MA. And if we can also break below this uptrend trend line, and as well as this 81 resistance turn support. So if we go back down to the 1 hour chart, we can see that price has actually closed below both the 200 MA as well as the 100 MA, retested above it, went above it, but buyers didn't really have much momentum. Then price came back down, and I had actually entered around here where it first broke through the 100 MA, and I had put my stop loss about 20 pips above entry, and I was lucky I didn't get stopped out, or I would have just had to enter again once the price had come back through. So far we've got about 27 pips, and we are expecting, if price breaks through that trend line, we could expect a 6.4 risk reward ratio. And that would give us 133 pips for that trade. The next pair that I'm looking at is, the trade that I took on the next pair, which was the Euro JPY. This trade was very successful because I was able to make 170 pips. Going into the details of why I took this trade, as we can see here, we're in a strong uptrend again, and price has been rejecting off this 127.075 level once, twice, 3 times. And I knew that when the daily candle over here went through that level and then closed back below it, that resistance level was still holding. So it gave me an indication that we could possibly open a short trade and trade back down to previous highs, which was the 125 level. Going down to the hour chart, when price broke below that 127 resistance area, it also broke structure and started bouncing off this 100 MA, and I was actually waiting for it to break through that 100 MA to give me like a confirmation that price was in fact heading down pretty strongly, you could say. It's pretty bearish. I entered my short position, and I had put my stop loss. Well, my stop loss was actually around 20 pips, to be honest. So yeah, just take off the magnet. Yes, my stop loss was about 20 pips. So it was a very good risk to reward ratio of 8, and I made 171 pips on this trade. As you can see, price was respecting the 200 MA. It was bouncing off that level, giving me more confirmation that my short trade was valid, and it was just a matter of holding on to that trade. If by any chance price had gone back up against me, I would have exited the trade once it had crossed back above the 100 MA 100 MA on the 5-minute chart. But I was pretty confident, seeing how price had been respecting the 200 MA on the hourly time frame. So this was a very good trade as well. So let's go on to the next one, which was gold. I haven't actually taken any trades on this, but I am keeping an eye on it just in case a good opportunity comes around. Just trying to find gold. Silver, gold. Okay. So this entire week, basically, I was waiting for price to move back above the 100 MA level. I actually missed an opportunity to enter over here on the 21st of January. But if we go down to the daily time frame, the reason for my interest in this pair, interest in this commodity, was the fact that price had been respecting this long-term daily uptrend. So it had one second bounce over here. On the third bounce, when this daily candle closed above that trend line, I started to really pay attention to this. I could have actually entered there, but I just wanted more confirmation. So that daily candle was over here. So I was waiting for price to at least come back above this 100 MA and enter over here, and then once it had crossed the 200 MA, it would have given me confirmation, but my stop loss would have been quite large. So if my entry was here, my stop loss would have been like all the way here, and I wasn't really willing to. I wouldn't risk that much on gold. So next week on Monday, we could have another possible buying opportunity if our stop loss was at, let's say, 57 pips, and our target would be the first obstacle here, which is the 100 MA. So that would be our first target where we could take partial profits, and our second target would be the 1953 level. So that is if gold is continuing to go up. So we'll see how that goes next week. That would actually give us quite a good risk to reward ratio of 16, with 57 pips risk and 971 pips profit, if that works in our favor. And gold is pretty it does correlate well with silver, so we will be looking at a long position on silver as well. Similar situation as gold on silver, so price has been going on a strong uptrend. Second touch, didn't really make a third touch on the trend line, but it did respect this 100 MA, creating higher lows and lots of exhaustion over here from sellers, so we are in a buyer's market, I would say. And price has respected this resistance level at 25.89, but if we can maybe break through that level, retest, we could be looking at a good opportunity for a buy going into the 1 hour time frame. We could actually enter on Monday because price has gone above that 100 MA, which is pretty strong confirmation, but we'll see where price opens up, and that stop loss would be placed underneath that 200 MA about over here, and our first initial target would be this level over here. So using risk management and using the correct lot size, you would be able to get a really good trade opportunity on that. The next trade that we'll look at today is the GBP JPY. I made 73 pips on this trade. Pretty straightforward. So we're in a strong uptrend over here on the daily chart. On the hourly, we were on bullish momentum, so price had broken through that 100 MA and been retesting that level for quite some time. I had actually entered as soon as it did break above that 100 MA and put a stop loss 20 pips below, and my target profit was at the next high, most recent high. So that was pretty straightforward. I didn't really do much on this. I just watched it and yeah, I made 70 pips on that, or 73 pips. That's a good trade. So yeah, that's basically everything for this week, and thanks for watching.
There was actually one more pair that I wanted to talk about, which was the GBP New Zealand dollar. On this trade, I'm preparing for a short position once the hourly candle breaks below the uptrend line, as well as the 200 MA. And if we can get a confirmation on the daily, that would be good as well. So we've got a long-term downtrend and a few touches here. Didn't really touch there, but we can see that price has been rejecting quite significantly in this area with that long wick. So that's giving me a good indication that sellers have come into the market. Going back down to the 1 hour time frame, we are in a bit of a consolidation as price is ping-ponging between the two MAs, but once it closes beneath that trend line as well as that 200 MA, we could be looking for a short position and managing it accordingly. So our target would be the 1.862 level, and we are going for 400 pips. So that's quite a big trade, and there is an obstacle there on the H4, which is the 200 as well as the 100 MA. So if it breaks through that, we are well on our way to that 400 pip mark. But if it respects that level, we could look for a bounce back, and we would have to manage the trade accordingly. And thanks for watching, and see you on the next one. Leave a like and subscribe to my channel for notifications on any future videos. Thank you.